And that's where we begin with our talk of the tape, a Bostic bombshell. The head of the Atlanta Fed suggesting this afternoon the Fed is willing to go too far if that is what it takes to bring inflation down. Stocks didn't like that pronouncement at all. Let's ask Cameron Dawson what it all means. She's the Chief Investment Officer for NewEdge's Wealth right here at Post 9. Okay, so it's fair to say the Fed is willing to overshoot. That's what Bostic said.
Yeah.
What do you make of that?
Well, I think that this is the equity market waking up to the harsh reality that this Fed is not going to cut interest rates in 2023, given where data currently is today. They simply don't have any evidence, whether it's from inflation or employment, that they will cut interest rates. And so as we saw stocks soften, it really reflects the fact that they were banking on this idea that we would see some easing in policy, and that's just not going to happen.
Yeah, I mean, it sort of begs the question of whether the Fed, and Steve Leisman is going to join us in a minute to discuss this, is tone deaf of sorts. Like Bostic saying they're willing to overshoot. Well, what about the data of late that's come in favorable on the inflation front? If the CPI is good on Thursday, are they still going to be talking about past 5% on the terminal rate and staying there, and a willingness to overshoot, i.e. put the economy into a recession?
Well, it's not just where inflation is today, it's if it comes back. And that's the key thing for this Fed. They are haunted by the idea of inflation reaccelerating, and that's why they are willing to overshoot. They'd rather tamp it down today, risk a shallow recession versus having to go full early 80s and really raise rates and plunge the economy into a much deeper correction.
We're assuming that they can control the dial so acutely that they can do that without preventing a deeper pullback in the economy.
Well, exactly, because if we look at their forecast for growth, it's very benign in the kind of slowdown that they see, and so we wouldn't be surprised if they did overshoot. But if we look at what the bond market's pricing in, they're pricing in a very dovish Fed, so nothing at all in line, which means that the bond market or the Fed would have to be so incredibly dovish, a huge pivot to outdove this bond market.
What do you make of the move that we've had in stocks so far? We were anchored to 3,800 or so on the S&P. We're able to move beyond that substantially on Friday, had a little something going today, late afternoon until Bostic started speaking.
Well, we think that as we looked at positioning going into the end of the year, we saw a lot of flows come out of equities, and we saw expectations start to move lower as well. That set us up for some kind of pain trade higher. But our view is that that's not really sustainable, because once you get above 4,000, 4,100, you're trading at simply unattractive valuations. So the short-term technicals can get you higher, but they can't keep you there.
So you'd rather sell out than buy in to this move?
Yeah, I think if we continue to see the market move higher on those technicals, on positioning, we would be wanting to take risk off the table, because we still see pressure on valuations and we still see pressure on earnings, which still have not come down yet. We have a 5% earnings growth forecasted for next year.
What if earnings aren't going to be as bad as people think?
Yeah.
It's not like it's set in stone that they're going to be horrendous or that expectations are dramatically too high at this point. They've come down a lot.
Yeah, I think that if earnings do come in a little bit better than expected, that does help us make the valuations today not nearly as bad as they might see if you see a big earnings decline. However, if earnings are better than expected, it likely reflects a strong economy and likely high inflation to drive that revenue growth. So in that environment, the Fed's not cutting rates, which means that you might get better earnings, but you're not going to get multiple expansion.